This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Natural Resources Investment Symposium in Boca Raton, Florida, July 7 through 11, or via live stream in the comfort and convenience of your own home. However you choose to attend, a few things that you need to know. First off, we're going to give you more programming between 50 and 55 hours over 4 days than you can absorb. To that end, the entire proceedings will be recorded and will be available to you whether you attend live or live stream, and you'll need it. The second thing is that we interview every public company exhibitor before the conference so that you have the ability to get to know the companies before you even arrive at the conference. Reaching out to and studying the companies before you arrive ensures that your time at the conference yields you the maximum results. A couple other things that you need to know too. Every public company exhibitor at our conference, unlike any other conference on the planet, are owned in the portfolios of the conference sponsors. No guarantee because I own the stock that the stock goes up, sadly, but there is a guarantee that every single public company issuer has been vetted and we know them well enough that we own them with our own money. So let's begin the process. Today, I interview a returning guest and a man I've known for really quite some time now, Mr. Duncan Craib, CEO of Boss Energy. Duncan, thank you for your efforts on behalf of investors, myself included, going back many years, and thank you for your sponsorship and support of our symposium.
Thank you, Rick. It's wonderful to be here again, and thanks again for the opportunity to be on the symposium.
Thank you for deserving it. Tell us, first of all, something about yourself. How did you come to be here? What is it that you've done up to now? Establish some credibility so that the folks care about your answers to the nosy questions to follow.
Thank you, Rick. Basically, I entered the uranium industry back in 2007 as the chief financial officer of a company called Kalahari Minerals. And Kalahari Minerals had a 43% holding in Extract Resources that went on to discover what's one of the largest mineral resource discoveries in uranium in the past few decades, located in Namibia, called Husab. So with Husab, we conducted one of the biggest drilling programs in the sort of 2000s for uranium. And then were eventually acquired by China General Nuclear in April 2012, upon which I was offered the role of being finance director to actually build that deposit into a mine and extract the resource. So the takeover acquisition was $2.2 billion US dollars. The actual mine build itself was $2.8 billion, so a total $5 billion type investment. But that went on to become one of the second largest producing uranium mines in the world today. Upon commissioning the mine in October 2016, I was then offered a role back in Australia, which I took, and that was being CEO of Boss Energy. So Boss Energy is the owner of two deposits, really, primarily, which is the 100% owned Honeymoon uranium mine in South Australia, and we have a 30% interest at asset level with Encore Energy's managed Alta Mesa project in South Texas. So, yeah, it's been quite a journey over many years, but we've been through the ups and downs, and just, wonderful getting to know you too, Rick, during this process as we've walked through it.
Well, I'm delighted to say that I was an Extract shareholder. Delighted, too, to have once been on the Honeymoon project when a family from San Diego controlled the project. I'm glad you wrested it from them. Tell us something about the value proposition now. Tell us, you've managed to build one. Tell us where we are and why we should care about Boss, where you're going.
Sure. So Boss Energy is listed primarily on the ASX. It's also Australian Stock Exchange. It's also on the OTC market in the US. It is the only multi-mine global producer in tier one countries on the ASX, with our interest in South Australia and our interest in South Texas. So with that, being a global producer, we really have first mover advantage because we see the current cycle that we're at the beginning of a new uranium cycle. I mean, there's so much positivity around, and here we are, we're up and running, and we're in production. So, yeah, the past 12 months has been pivotal for both operations.
Tell us something about how you hope to grow those operations, and tell us what else may be on the offing. I agree with you that we're early in a multi-year bull market.
Well, Rick, really, I mean, the Honeymoon commenced production in April 2024. So we're now really going through our first year of ramp up, and I'm really delighted that we're within weeks of achieving our first year production guidance of 850,000 pounds. So of all the restart projects, irrespective of commodity, we're actually hitting our goals. And I think that's really testament to the people that we employ and who manage and operate the company. And from there, we just believe that we're going to continue our growth in terms of ramp up to hit our nameplate production. So 850,000 pounds on honeymoon by June in a matter of weeks, on to 1.6 million pounds in the following financial year. So very, very exciting growth from a production perspective at the same time that the commodity price is also increasing. When we look across to South Texas, the Alta Mesa mine's also going through its first year of ramp up and also beginning to produce more and more pounds. So what's really pleasing, Rick, is that a couple of months ago in April, I was able to announce that Honeymoon itself has become net positive cash flows. So our mine in South Australia pays for itself. We're now looking to grow the project, and whether that be organic through exploration or inorganic through mergers and acquisitions. But we really feel that we've got first mover advantage, earning positive cash flow, ready to take advantage of the new commodity cycle.
And how were these two facilities financed? Was it a traditional project finance? And if so, how does the interplay between cash in, cash out look for you in 2025 and
We
2026?
actually, with uranium, because when we announced our final investment decision, so going back to June 2022, at that stage, the uranium price was 45 US a pound. Now, to enter into debt finance, that would mean that we'd have to contract a lot of our forward production at low prices, and we were unwilling to do that because it sort of caps your upside. So we waited for the equity markets, and fortunately, they picked up, and we were able to sort of equity raise for that mine build. So really, we raised equity. We also did another thing that we bought physical pounds back, 1.25 million pounds back in March of 21. So that in itself, we bought those at 30 US a pound. And if you think now we can sell those at sort of between 70 to 80 US a pound, that was a really savvy investment. So really through debt, really through equity finance and also being clever with how we purchase physical uranium, we've managed to come out now that we have $250 million in liquid assets on our balance sheet, zero debt. So that money that we're making from Honeymoon is really going into the coffers to help our expansion plans.
So clearly a pristine balance sheet, cash flow positive. You control your own future. You were one of the few who fulfilled my dream of beginning the process of consolidation. You talked a little bit about inorganic growth. Do you think that that's a possible avenue for you in the future?
I do. I mean, yes, absolutely. We have to grow. We don't want all our eggs in one basket with Honeymoon. We really want to consolidate. I believe that one needs to really consolidate, particularly the corporate overheads, which can be quite, add to the largesse of spend. So synergizing the corporate overheads and really what really drives these mines is building one culture amongst the various teams and one aspiration. So with that, we've also recently acquired 19.7% of Laramide Resources. And Laramide Resources is a TSX primary listed uranium company. It's got assets in Utah, New Mexico, but it's also got a wonderful deposit in Queensland, Australia called Westmoreland. So we've been trying to work with them for many years. They've been sort of obstructive to that process. So we bought the shares on market and we've now got a sort of foot on the company to help develop that. But we really want to expand and synergize and go forward. So yeah, mergers and acquisitions I'm in favour of. Having said that, it's really important for us not to lose focus on our flagship mines, Honeymoon and Alta Mesa. So they're the bedrock that provide the foundation to then go forward and expand, and that's how we're operating ourselves. But Rick, pleased to say that over the 8-year journey that we've been on with Boss Energy, we've delivered total shareholder returns on an annualised basis of 39%. So it's been a terrific outcome to date.
Well, as you know, I've been a participant, and I thank you for that. Best of luck with the Laramide people. I know them fairly well, so if I can be of use, let me know.
Thank you
To
very
the
much.
extent To the extent that our attendees want to learn more about Boss Energy before the conference, who do they contact and how do they reach that person?
Rick, I'd be delighted to take any inquiries, and I think it's best to email me directly. So it's a fairly clear email address. It's my first name, so Duncan, Duncan, at bossenergy.com. So any inquiries I get, I'll respond to.
There you have it, ladies and gentlemen. Call the boss. Duncan, thank you for your efforts on behalf of investors and shareholders. Thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium. I look forward to hosting you in Boca.
Thank you very much, Rick. We very much look forward to it. Thank you.